Let's bring in iCapital's Shonali Bassick and CNBC contributor Malcolm Ethridge of Capital Area Planning Group. Liz Thomas, of course, is still with us. Shonali, I'll ask you first. Just back to where we were in this conversation about too highly valued, too frothy, or just fine, justified because earnings have justified it?
It's really easy to see why investors would get anxious around these levels. But back to the irrational exuberance comment you guys were making a little earlier, Ed Yardeni in that same note made this great observation that back in the dot-com bubble, the S&P 500, the peak was 25 times earnings. And there were less earnings then than there are now. So we like what we see in the AI trade. But of course, in the next couple of weeks, there are reasons to see a little anxiety in the markets based on the macro and the run-up to earnings season, where expectations headed into this season are higher than where they were last season.
Malcolm, whenever we talk about valuation and you say, well, the market's too rich, it's always couched by those who want to make the counter argument by saying, well, that's only if you look at what's happened with the AI-related stocks, the Mag 7, because the equal weight is at a much more reasonable valuation, they suggest, than the S&P 500. So stop saying that the market is so richly priced because it's all due to 7 or so stocks.
Well, I think that it's impossible to talk about the market without focusing so much, not necessarily on the Mag 7, because I want to include Oracle and Broadcom into the conversation, but it's AI or nothing right now. So it's not unrealistic that the conversation would be so heavily dominated on the airwaves today, yesterday, and the days before with this AI revolution. But I think deservedly so, right? When we just think about the fact that Oracle, NVIDIA, and OpenAI, even though it's still a private company, if it would have come public today, would be a mega cap tech company immediately. So I'll throw it in there. All of those companies dominate the conversation, and they also dominate the space. If you just consider all the deals that have been announced this quarter alone, with all the different investments in AI data centers and everything else, it only involves 3 or 4 companies. And so it's almost impossible for us to really consider a world like Liz was talking about at the onset, where a fizzling out of the markets takes out a little bit of the irrational exuberance, and then those dollars kind of spread even weight like you were just describing. I would have a feeling that those dollars would immediately rush back into the top 10 names that all are tangentially aligned with this AI tech trade.
Malcolm, if you didn't own Apple and Amazon and Microsoft and NVIDIA and Oracle, would you buy them today?
I would say yes to all of those, save for Oracle. I think that all of the news as it relates to Oracle near term has to be fully baked into this story, which is probably why, even as we hear the story, the announcement, and Sam Altman's out doing the roadshow right now, all the great things that are happening with Oracle, including the announcement with the TikTok deal potentially tomorrow, I think that all the good news is already out near term, and this is probably a good place, if you've been in that name for quite some time, for you to be taking some profits and ringing the register a little bit. But for all of those other names you mentioned, I still think this is a good place to be adding to those positions, not necessarily worried that just because we've gone hot recently means that we can't continue to roll on through the end of this year.
We have a lot of large numbers coming. I mean, this week was a perfect reminder with the NVIDIA announcement, and then OpenAI, and then Jensen and Sam Altman, respectively, on the network, talking about these numbers. That's probably why it's making people nervous, to which Sam Altman even tells us, I understand why people are nervous. Should they be, about all the spending that they're seeing and what it might mean for the stocks down the road if they don't produce the return on that investment?
What's down the road, right? Is it the end of this year, or is it well into next year? Because there are reasons to be maybe nervous this year for some reasons, but something I would love to see, and tell me if I'm wrong here, how much of this have we actually seen flow through the rest of corporate America? And how much have we seen margins come down because of their use of AI? That marginal client, when you talk to these large companies, they tell you that there's 2-3 years before you even start to see the real benefits, and you have the sell side starting to bake in. And I think this is an amazing statistic that AI is already accounting today for between 0.5 to 1% of GDP growth. It's already showing, in theory, in the numbers of growth today. Now, how do you pair that with a weakening labor market? I think that's where the story gets a little more confusing. Where's all that productivity coming from? AI is not explaining all of it. And so as the labor market weakens and the economy seems to weaken for a lot of people, the question is, can that growth keep coming from AI, and what are the broader implications for that?
Yeah, I mean, it does play into the Fed chair, and I guess a little bit lost yesterday in the download of the comments that he made, which were so focused on, my earlier program and even here to some degree, the fairly highly valued comment about the stock market. But Chair Powell didn't seem like he was running to hit the button for the next rate cut until he sees more data, right?
Yeah. He has always valued flexibility and always pared back the market's expectations. The market has been telling the Fed for a long time now that it wants more cuts. And I think that they continue to be concerned about inflation, not necessarily because they suddenly think tariffs are going to be a lasting issue and drive it higher, but because they don't want to cut too aggressively. And there's a lot of rhetoric out there about aggressive cuts depending on who ends up in some of these open Fed seats. If they cut too aggressively and stoke inflation, we've got a much bigger problem on the other side, and then they're hiking. So I think that's the flexibility and the tone that he wants to take. I still think we're going to get at least another cut this year. I don't know that we're going to get as many next year as everybody expects, unless the labor market continues to weaken. There is a tipping point, though, where as the labor market weakens, if it gets too weak, those cuts are not coming because the Fed can anymore, and then we're in a different era.
Well, I mean, Malcolm, that's why, this whole risks to both sides comment that he goes out of his way, the Fed chair, to make sure people understand that this isn't 100% certain that they are going to make the right decisions based on what they see now. Sounded to me yesterday that while he's willing to go ahead now and write down, okay, the inflation caused by tariffs is going to cause one-time price increases. But the one-time price increases may not be today and they may not be tomorrow. We might not see it for a while. It could be uneven in when they actually take hold and filter into the economy, which makes their job even more difficult.
Yeah, I think if nothing else, we saw the Fed trying to throw some cold water on those animal spirits we started the conversation with, right? They're trying to make sure that we at least have a trap door so that if October 29 comes along and they decide to hit the pause button, markets don't overreact and say, oh my God, they decided to reverse course. That must mean something negative and now a sell-off brews. I think that more realistically, we can expect at least one cut to happen this year. The Fed wants to give itself some wiggle room in case no more than that actually happens. And I think this was really just messaging to make sure that the markets don't fall apart if we get to the end of October and we're a little bit dissatisfied with what we see.
Hey, Malcolm, when you see Christina do the reporting on Baba's big breakout today and then the fact that a lot of these stocks have done well, does it make you want to buy China tech names for the first time in an awfully long time, if ever?
I would have a hard time deciding that it's a good time to invest in China tech names, just considering all of the rhetoric, the souring relationship between the U.S. and the CCP and everything else. But I would say that it's a good sign that it's time to be looking international if you haven't already, because we've been owning and dominating the AI tech trade since 2022 when ChatGPT first hit the scene. But it's unrealistic to expect that we were going to be able to maintain that and keep that genie in the bottle here in the U.S. forever. And so it is a good time to be looking at where the opportunities are coming in Europe, for example, in Latin America and other parts of Asia, because those companies also don't have the ability to stay private as long as our companies do in the United States, because they just don't have the venture capital dollars to keep them afloat. And so they're going to be coming out to those exchanges looking for opportunities for liquidity, which gives investors like us the ability to be in there and realize a lot more of that gain.
Shanali, how do you assess that?
The China versus
trade, which was like deemed to be uninvestable not that long ago. But now that these stocks are off to the races and China's not, as Malcolm was talking about, they're not going to just cede the whole thing to the U.S. when it comes to AI.
Listen, I think you have to look at how the globe is playing AI, too, because in theory, sovereigns and demand from other countries could be a huge set of demand for the U.S. players. However, if China starts to take some of that away, I think that's what the context is here. You have to see where that money ends up going at the end of the day and how the race plays out.
All right, we'll leave it there. Malcolm, thanks. Sonali, thanks. Liz, we'll see you soon.